If you've been waiting for the perfect moment to jump into the stock market, this might be it. Because today, I'm revealing what I genuinely believe could be the steal of the century. A stock so overlooked, so misunderstood, and so deeply undervalued that in a few years, people might look back and say, how did we miss that? And if you're watching this video right now, you're already ahead of the curve. Welcome back to the channel, Stock Predictor Family, where we break down hidden opportunities the mainstream financial world ignores. And today's opportunity might be one of the biggest we've ever talked about. Now, before I tell you the name of the company, I want you to understand something important. Most investors don't get rich because they buy what's trending. They get rich because they buy what's boring. They buy what's undervalued. They buy what the market has mispriced. They buy when everyone else is distracted. And right now, investors are distracted by AI hype, crypto cycles, and a market chasing shiny objects. Meanwhile, one company is quietly positioning itself for massive gains, and Wall Street is still asleep at the wheel. The stock I'm talking about isn't glamorous, it isn't a meme stock, and it definitely isn't being pumped on every major financial channel. Instead, it's a cash-generating machine with strong fundamentals and a long growth runway ahead. And what makes it the steal of the century isn't just the price, it's the timing. Because we are catching this stock at the exact moment when the market sentiment is shifting, the financials are improving, and a major catalyst is developing behind the scenes. Let's start with why this stock is so mispriced. Over the last 18 to 24 months, the entire sector it belongs to has been hammered, not because the businesses were weak, but because investors moved their money into growth-heavy tech companies. They wanted fast returns, quick hype, and flashy earnings. But while those investors were chasing excitement, long-term value quietly built up in companies like the one I'm sharing today. They kept lowering their debt, increasing efficiency, expanding operations, and improving margins. And now, just as the broader market is beginning to rotate back into value-heavy sectors, this company sits perfectly aligned for a breakout. What makes this stock special is that it has multiple sources of revenue, not just one. It's diversified enough to survive downturns, but streamlined enough to grow aggressively when the economy strengthens. And the best part, insiders, the people who actually run the company, have been buying shares at the current price levels. And when insiders buy, they're not speculating. They know something. They see what's coming. They understand the long-term trajectory. Let me paint a quick picture for you. Imagine a company that is currently trading at a price-to-earnings ratio far below the market average. Imagine a company with solid free cash flow, a strong balance sheet, and consistent demand for the products and services it provides. Imagine a company that analysts have repeatedly underestimated, leaving room for upward revisions in the coming quarters. Now imagine this company is on the verge of unlocking a new revenue opportunity that could significantly boost annual earnings. That is exactly the position this stock is in right now. The market loves predictable cash flow, and this company has it. The market loves expanding margins, and this company is delivering it. The market loves reduced debt levels, and this company has aggressively paid it down. And the market loves catalysts, those moments when everything changes. And this company has one right around the corner. If you've been following the economy, you know that we're entering a phase where consumer demand is stabilizing, inflation is cooling, and interest rates are expected to adjust. These macroeconomic shifts play directly into the strengths of this business. Lower borrowing costs improve profitability. Strong consumer demand increases revenue. And the reduction in inflation improves margins. Analysts are expecting the sector to rebound strongly over the next several quarters, and this company is positioned at the front of that rebound. What really makes this stock the steal of the century is how undervalued it is compared to its peers. When you compare its revenue growth, earnings potential, and balance sheet strength, it becomes clear that the market has priced it unfairly. Wall Street isn't paying attention yet, but soon they will. And when the attention comes, so will the price surge. Now, I want to break down some of the reasons investors are overlooking this stock. First, the company doesn't have flashy marketing. It doesn't make headlines every week. It doesn't announce huge innovations. But remember, boring companies often make the most money. Second, because the entire sector took a hit recently, many investors assume the weaknesses apply to every company in the space. But this one didn't just survive, it strengthened. Third, there's a simple psychological factor. People chase what's trending. That leaves hidden gems behind. And trust me, this company is a hidden gem. If you look at the financial statements, you'll notice something unusual. Despite the sector-wide downturn, revenue remained stable. Operating margins didn't collapse like many analysts expected. In fact, the company found ways to operate more efficiently, and it shows in the numbers. They cut unnecessary costs, optimized supply chains, renegotiated contracts, and made long-term investments that are just now beginning to pay off. On top of that, this company has been buying back shares, a move that increases shareholder value over time. When a company buys back its own stock, it shows confidence in future growth. And historically, stocks with strong buyback programs tend to outperform over the long run. Now let's talk about growth. This company isn't just maintaining its business, it's expanding. They recently invested in new technology and infrastructure that will reduce long-term costs and boost future earnings. While the market is distracted by AI and tech stocks, this company is quietly modernizing and preparing for a new growth cycle in its sector. And once that cycle begins, early investors stand to benefit the most. Catalysts are what move stocks in a big way, and this one has several. First, the upcoming quarterly earnings are expected to beat expectations. Second, analysts have hinted at potential upgrades in the coming months. Third, institutional investors, the big players, have slowly started building positions. And when institutional money flows in, the price moves quickly. One of the biggest catalysts, though, is something most retail investors haven't noticed yet. The company is entering a new market segment. This new expansion has the potential to add millions in revenue annually. And because the market hasn't priced in this new revenue stream yet, the stock remains undervalued. But here's the thing, this opportunity won't stay quiet for long. Eventually, big investors are going to see the value. Mainstream financial shows will start highlighting the company. Analysts will begin raising price targets. And once that happens, the stock will move fast. Getting in now is what separates early investors from late chasers. This stock reminds me of companies that everyone ignored for years, only for them to 10x later. Not because they went viral or because they got hyped up, but because they were fundamentally strong and undervalued. This company has that same energy. And if history repeats itself, this situation could play out in a very similar way. Now I want to talk about risk, because no investment is risk-free, not even this one. But the key difference here is that the downside risk is limited, while the upside potential is massive. The company has enough cash reserves to weather short-term storms. Debt levels are manageable and trending downward. Demand for their products and services is consistent. And unlike highly speculative companies, this one actually makes money, real revenue, real profit, real growth. What's also important is that you don't need this company to explode tomorrow. Even if it grows slowly, the long-term upside is strong. But if the catalysts hit, and many of them look ready to hit soon, the stock could see much faster growth than expected. I want you to imagine a scenario a year from now. The stock has doubled or tripled, analysts are calling it the comeback story of the year, and new investors are piling in at much higher prices. Meanwhile, the people who watched this video early and took action are sitting comfortably in profit. That's the potential we're talking about today. When we call something the steal of the century, we're not talking about hype. We're talking about a combination of undervaluation, strong fundamentals, positive catalysts, sector rotation, and perfect timing. All of those factors are aligned right now. So if you're serious about investing, not gambling, not chasing hype, but genuinely building long-term wealth, this stock deserves your attention. It deserves a spot on your watch list at the very least, and for some investors, it may deserve a spot in the portfolio. Before I wrap up, I want you to remember something. Opportunities like this don't come around often. The market gives you windows, narrow windows, where a stock is undervalued, ignored, and ripe for growth. If you miss that window, the price will move, and the opportunity disappears. You don't want to look back years from now wishing you had taken the chance. This company is strong, it's stable, it's growing, and most importantly, it's cheap. That is the perfect combination for long-term success. And that's why I truly believe this may be the steal of the century. If you found this breakdown valuable, make sure to subscribe to Stock Predictor for more deep dives, hidden opportunities, and market insights the big channels won't give you. Thanks for watching, and I'll see you in the next video.